All right, good evening, everyone. It's still the voice of Doing FX. And in today, we'll be looking at market overview of the major currency pairs and also some minor pairs. All right, so let's go straight into the chart. And then we look at what kind of price action we are having. All right. And first, we can say that we had this big impulse move to the downside on the USD Swiss franc from the daily time frame or weekly time frame. All right, we can see this massive push to the downside. All right, and what we can clearly see that price from this point started to do a correction to the upside from this low. So what we have overall, that market is in a bit of consolidation, and the larger degree of the trend is to the downside. All right, we had it that market actually did make this low inside of this area. From this point, we had a market made an ABC, all right, to the upside. And the market then made an ABC to the upside, all right, and this now became our S leg. So what we could expect of the market, that the market did from that point started correcting. All right, so this was the high of the market, which the market actually did witness a high. All right, because from this point, that whosoever actually got in on the buy, instead of this area, we had a massive volume from this point here. Instead of this area, actually got out here. So whoever was buying actually got out here, and the market did this correction to the downside. All right, so what we have overall, that market did actually start making a correction. All right, so overall, the larger degree trend is to the downside because we had this previous high instead of this area. All right, and market is still correcting. So if I assume that what I expect of the market after a three-wave move to the upside, all right, what I expect is another three-wave move to the downside. All right, so what I'm seeing from a weekly perspective is that market can actually start to make another ABC to the downside. All right, that's what I expect of the market, because I like to look at when I set up, you have a setup like this, three-wave move to the upside. What do you expect to have is a three-wave move to the downside, at least to complete the pattern of a balanced market. All right, so what I want to see is that I want to see the market actually start correcting after this high, start to make another three-wave move to the downside, probably inside of this area here where we'll look to take profit. So what we can identify is that market is still in a bit of a downtrend. All right, so market did actually bounce up from this point, which was an A point, then made this highs, all right, to the B point, and I'm expecting that if the market will actually do a flat, all right, from here to the upside, because this can be our C leg, all right, but if the market actually does break below this point, we can start to think that the market is actually ready to make those pushes downside to complete those patterns. All right, so that's what I expect of the market. So from the daily time frame, what kind of price action we are seeing from the daily time frame, and how can we get into making a trade decision? All right, one of the things we can identify that market has since then bounced off 1, 2 of this level here, and we can have from this point actually a great deal of volume that whosoever got in here actually popped out of this point, and then market actually start moving to the upside and on its own. All right, so what can we clearly see? We can clearly see that from the daily time frame, what kind of structure are we seeing from the daily time frame? That is when we can start making decisions on how to get involved. All right, so what we can clearly see from the time frame is that market is actually indeed consolidating. All right, we have this to be a high, and we have this market to be in some sort of wedge. All right, but don't get it all wrong, because a lot of times traders actually get it wrong while trading the Elliott wave. All right, they get it all wrong and they start labeling all sort of nonsense all over the charts, and you don't want to actually do that to yourself, because you're actually going to be wrong, or actually going to be stopped before even the whole party begins. All right, so let's first of all look at what we can see. We can see this great volume inside of this area here. and this actually corresponded with this area here. So whoever got in actually got out of this high. So this is now a high that we want to take into recognition. All right. Now, what else do we want to see from the market to actually draw a trading plan? All right. We have it that price inside of this area, and we had it that from this point we had a decrease in the volume. From this point, we had a decrease in volume. As you can see, a decrease in volume started decreasing. All right, and we have is that when market was actually here, market did not break another high. So what are we expecting of the market to do? We are expecting the market to actually complete the correction phase before then looking for a new direction. So what we can expect is that this could actually be our A leg, and this will be our B. All right. So that is what I expect of the market, that from this point, I can expect the market to actually come in and break this area of structure, which indeed will actually coincide with what I expected to see of the market if the market will indeed want to make either a flat or a running flat. All right. So what we can clearly see that market have indeed attempted to make this B leg, all right, which is the highest point, and we can then assume that this doesn't look like a setup for a running flat. All right, doesn't like a setup for a running flat. We can expect a flat into this area. So what we want to be seeing, we want to be seeing a reason and a confirmation to sell inside of this area with the right volume. All right. At the moment, we cannot find volume yet. All right. What we can see, we can't really find enough volume to actually start making a prediction, because at this point, when we had a buy, at this point, we had it that we had a great deal of volume. All right. So let's speak about volume a little bit. We had a great deal of volume inside of this area when we actually had this buy initially, because when markets came into this zone, we could see that there was a great deal of volume actually rising above the moving average here. We had a very low close. So whoever got in here from this volume accumulation actually got out of here. So what we have now is actually the market trying to correct. So what I expect to see of the market is the market then giving us a reaction of this area, then we can look for a sell to the downside. But overall, we can't see any spike in the volume. And if actually the market will want to come into this area, it will actually do that at its own free will. All right. It's not something we should be cheerful about, something we should be happy about. All right. So we can see that we had a deeper close of this zone inside of this area. So what I want to expect to see, which is a new week, all right, I expect to see the market try and do some sort of push into this area to testing this area. And if this area seems to hold, all right, this is a new week, and we could expect the market to actually come up to this higher and test it again, all right. So if market actually does come into this area to testing this area, we will look to sell from this area to the downside with the right risk to reward, all right, to actually then target the B leg to complete this flat pattern, all right. So that's the situation we have with the USD CHF. And let's move straight into another play, the USD card. All right. Now the USD card, what kind of price action do I expect, or what do I expect to see of the market? First, I spoke about this play when this play was inside of this area, and what did I want to see from this structure? I wanted to see the market actually does starting to make a push to the upside, because after a three-wave move to the upside, what do you want to see? You want to see a correction. All right. So this was actually an XYZ to the upside, or WXY to the upside, and we had this to be our X point. So this is now our A point, and I expect my B point to terminate inside of this area. And then I can look to buy with the right risk reward to actually make my C leg to the upside. All right. So what kind of price action are we having from the daily time frame? Generally, I spoke about this before, that what I want to be seeing first is I want to be seeing the market actually starting to show commitment of actually playing into my trading plan. Before then I can commit to the market. So what can we clearly see? At the moment, we don't have any volume inside of this area. All right. The last point which we had volume was here, at the volume spike, and whoever that got in here actually hopped off here, and sellers actually got into the market more. And when this actually happened, that the market actually moved into the downside. So what kind of action do we want to see, and what could we expect of the market? One of the things I could expect to see from the market is to see that the market will actually, from this point, does make a reaction to the upside. All right. So when that happens, what I want to see first is a bit of confirmation. All right. I want to see some bit of confirmation. I want wanted some bit of confirmation inside of this area for a push to the upside. So what really do I want to see? I want to see the completion of an ABC pattern, because looking at this, we had a WXY, all right, a WXY, which is actually does indeed correcting, all right. So what we want to be seeing is the completion of the ABC pattern. Okay, so what I want to be seeing is an APC completing, because one of the things we had here was an WXY up here, and this is now our X leg. So we need to expect to see an A, which is this high here, and we expect to see a B inside of this area, and I expect to see a C inside of that area. So that is what I expect to see of the market. But from this point, at the moment, we don't have any bit of confirmation as to that market will actually want to make a push into this area. So what will be our confirmation? One of the things we saw last week, that we had a very, very big close. All right, we had this big close of this area. What we want to be seeing is increase in volume. All right, we want to be seeing some reasons and some bit of volume coming into the market and showing us some bit of proof that the market indeed wants to actually do that which we expect of the market to do. So from the H4, what I see from the H4, that market indeed from this point made this low. So if actually the market can indeed break above this previous high that was actually in the market, we can then start drawing conclusions. The market is actually ready to indeed actually take up our position and then continue the upside. All right. But what I know technically that I want to be seeing that from this point of our low should be our B, and that we do not know at the moment, but we can find it that we have an A inside of this area. So what do we expect from after an A? We expect an ABC correction to the upside. All right. So this is now what I expect of the market. I expect the market to actually complete this ABC pattern to the upside. All right. From that point, I will only have to wait and be reactive and not predictive. All right. So I need the market to actually commit to me before I can then commit to the market. So if the market can actually start seeing some volume, because here we actually saw some bit of volume, all right, spiking, and some bit of confirmation. Here we also had volume, all right, a massive fall volume, but the market was still making lower lows and lower highs. All right. So by the time market started making a higher high and a higher low, then we can start drawing conclusions as to if we want to take that trading action. All right. So that is the situation with the USD Canadian dollar. All right. So let's move to the other pair, which also we had an analysis planned for this week. All right. So the other pair which we actually have in mind to actually trade this week is the USD JPY. One of the reasons why I want to be trading the USD JPY is that we could see that the market is actually indeed correcting, all right, because this is a correction, all right. A correction is actually a choppy price action, all right, enclosed by parallel lines, all right. So this market is actually a correcting market unless anyone has a prior reasons to actually say this is an impulsive market, but definitely the market is actually indeed correcting, because that is what I can identify, that the market is indeed correcting. All right. From this point, we wanted to see an increase in volume, and that we did see, and we took a trade. All right. We took a trade inside of this area because we had that volume actually spiked up here. And at this point, what we wanted to see was a completion of the pattern. All right. And we actually did see that completion of that pattern, but also note here that we didn't see any volume as to confirming that the market is indeed actually starting to go up. But what conclusions can I draw from this market? One of the things I wanted to do was to hop into a trade from this point and actually get off from this point. And I would expect the market to actually come back to this area if I have a double bounce of this area, because this is a key area which I want to take, start taking decisions or price action, looking at price actions at, all right. It's a very key area I want to be actually concerned with at the moment. So if I am taking my profit of the 107, all right, if indeed price makes a reversal, all right, with the right volume to bounce off here, I will look to buy inside of the area. But first, I had a trade inside of this area, and I want to hop off around the 10700, all right? If the market did indeed break out of this channel, all right, and make a push to the upside, I will still be in the trade to continue the 5-wave pattern to the upside, to correct, to complete the B pattern, because this, from this point, is actually a complex correction pattern, which we have the WXY and the X Z pattern, all right? So it's a complex correction which we are seeing at the market at the moment, and until the highs of this X and also the W is actually taken off, we can say that indeed the market is still correcting. But what I want to be seeing, if the market did bounce off this area and make a regular retest of this zone, it will be a very good time to buy into breaking out of this structure. All right, so let's go next to another pay which we have. I spoke about this pay that if I like to use the if statement. All right, I like to use the if statement because nothing is certain when it comes to trading. I like to use the if statement that if this is actually happening, then Aussie USD will go into extinction. But overall, what do we want to see? Now, overall, what do you want to see? First, we have to go to the monthly time frame. I like to use the IDC, all right, broker, because this offers me a lot of options to actually go back in time into identifying what I want to be seeing from the market. All right, so let's start from using our IDC and then understanding what we expect to see of the market. All right, so let's go back as far as late in the past to see. Okay, so if you can actually do the wave count, this was far back to 1974. All right, you can start doing the wave count from this point, and this is our wave 1 to 2. This is our wave 3. All right, and this is our wave 4. All right, which is the ABC pattern, and this is the wave 5. Now, definitely, price indeed after a 5-wave move. All right, after a 5-wave move to the downside. All right, will indeed make a 3-wave move correction to the upside. So this is what we can see from our wave 5. Market did indeed start to make a correction to the upside because this was a 3-wave move to the upside. All right, so that's what I can identify from this analysis alone. So the reason why I took us back to this time was actually to prove a point and also state why I expect the market to actually change in direction into doing something very different. All right, so this is our B point, and we have it that the market is back into this area. So what do we want to see from this point? All right, so let's go back and use our FXCM or Owando to actually start drawing conclusions as to what we expect to see of the market. So if this indeed is our B point, which we have seen from the past, and the market making an ABC from this point to the upside, and this our B point, our B zone, which we currently have it that market actually did come back into testing that zone. All right. Now, what do we expect to see of the market? What we expect to see of the market is some bit of reaction. Now, we had it that volume actually increased from here, and we had it that price were actually still moving down, but this was the only point that there was an increase in volume. All right. This was a massive increase in volume last month. All right, last month there was a massive increase in volume last month. All right, inside of this area. So I am starting to draw conclusions that the bulls have actually started believing in making the push to an upside. All right, from this point I can start drawing conclusions that the market does indeed have no plans of breaking this zone, because look at the volume we had in this area. All right, look at the volume, massive volume we had in this area, and let me actually go deep down, zooming in. All right, we had a massive volume inside of this area, and we had a spike. All right, we also had a massive volume here, and the market was still correcting. So here I believe that this candle alone, all right, was actually a bearish candle. All right, let's go deep down to actually understand the psychology or the market psychology behind this kind of last month. All right, market did indeed try to make this break. All right, but buyers somehow came into the market and took up price. So whoever was selling here, because of this zone of the B point of the B leg, actually started to say, okay, I want to hop off. And the bulls actually found this area as a good position to actually tell the bears, thank you very much. I will take it from here. And they took it from here and they are now pushing price to actually testing this zone. So this is a psychological level, or this is a very key area that market will actually start looking for some bit of confirmations as to making another push, or this will be a very key area for the bulls and the bears to actually play it out. All right. So at the end of the day, it is who wins the day. So what we will be doing as traders, what we'll be doing overall will be to watch out for price action confirming whosoever wins the day, and we just have to do what, react to it. All right. So what I expect is the market to come inside of this area, and we could have a bounce inside of this area. All right. And that's what I expect to see of the market. But overall, market is still bullish from the monthly time frame after making this high. So we can see that the market did make this high close. All right, made this high close. So this is a clear signal that the bulls are back in the market. All right, same situation we had here. All right, same situation we had here. We had a very high close after we had this spike in volume. All right, we started having high close. So what do you expect to see? If we could have some bit of correction inside of this area before price indeed get to this point, it will be a good opportunity for a buy. So what we will be doing as traders and as students of price action, we are still having market actually making highs. All right, here indeed the sellers actually try to hop up the market, and we could see there was a spike in volume here, but the bulls were actually still very much available in the market and still making new highs, right? So we have not seen any bit of confirmation as to price will actually start to correct inside of this area. So what do we want to see? First, we could identify that market is actually trading in this channel, all right? And this is definitely a correction, all right? This is definitely a correction, all right? So we could expect that if price can indeed bounce off this area with such great power, that it will actually start making a move to the upside, all right, to breaking this channel and to looking for a new direction in the market. So looking at this, overall, the market is still bullish, and we have to wait for some confirmations to if we are going to start selling this space. We have is that volume did indeed spike up here above the moving average, and we have excess volume spiking up, all right, and we have a CCI still making its way to the high. So what we want to be seeing is the CCI making its way to the high. Then we can start looking for reactions that market is indeed about ready to make the push to the downside. So we need to be reactive and not predictive, all right, in our execution. So we did see from a daily time frame that market did make this high close, all right, and we could expect to see what kind of reaction we will be having inside of this area. All right, at this high we saw that we had a spike in volume, all right, had a spike in volume here, and the market actually did start this rally from this spike alone. All right, market was pushing up and we had this spike in volume, and then market started pushing down. So what do we need to see? We need to see some bit of confirmation from either volume or whatever we need to see, because we have reasons or plan of entry. All right, so we have reasons or what we want to be seeing, some confirmations before actually hopping to making a trading decision. All right, so what we need to see is some bit of reaction inside of this area, all right, and we can then look to sell to the downside, all right, for a correction at least to correct into this zone, all right, at least to correct into this zone first, and also this zone here, because these are two key levels which one of the same price actually did come and make a bounce. All right, so if this is actually going to be our wave A, all right, to 2, and this will be our wave 4, all right, and we need to expect a deeper retracement. So if we take our Fibonacci from this swing low, right, to this swing high, we will identify that this area here coincides with the 61.8 Fibonacci level, and by rules that the wave 4 should not go below the price level of wave 2. So this is where we need to see a correction inside of, all right. Let's go straight to another pair, and which it will be the gold and the silver, all right. Now I want to start with the silver. One of the things we could clearly see from the silver here, from the monthly time frame, all right, the monthly time frame, we had it that price indeed came into this zone, all right. This was a massive push from this high, all right. Price did get into this zone and then started trading in this triangle, all right. Start trading this triangle, all right. So we can start our labeling for this to be a X, this to be a 1, this to be a 2, and this could be a 3, and this actually is our 4, and we could expect our 5 inside of this area for a push to the downside, all right. Now, what also can we see? Market indeed did an accumulation inside of this area in the monthly time frame. Market indeed made an accumulation inside of this area, all right, that we should also identify. And we could also identify that if these are X leg and these are A leg, all right, if these are X leg and these are A leg, all right, and this is our B leg, all right, the market will actually make this a C leg and start this rally to the downside. That's what also we need to understand, that this could actually be an ABC, all right, actually be an ABC, all right. So this will look like a typical flat pattern, all right. This will be a flat pattern, all right. Now let's also see from the weekly time frame what kind of price action we are seeing from the weekly time frame. On the weekly time frame, all right, it might not be actually clear to us, but we did see that price indeed broke out of this environment. Let's mark it clearly. Price indeed took over this low in the weekly time frame before making this rise. And one of the things we can also identify is the speed or the angle of the move, all right. So we can see that this is a correction of the ABC, but this alone doesn't look like a correction. It looks like a new impulse, all right. It is a fast moving market, all right. It's fast. The speed is unique, all right. The fast moving market, and we understand that an impulse wave is a 5-wave move structure to the downside, all right. 5-wave move structure to downside, clean 5-wave move, all right. So if that is the case, what can we identify from this setup? One, we can start drawing conclusion that this could be our wave 1, this could be our wave 2, this could be our wave 3, and the market is actually starting to make our wave 4 completion inside of this area. If that will be the situation, and this is an ABC, all right, that ABC zigzag to the upside, price could indeed bounce off this area and then make a push to the downside to complete the wave 5. So if we look at it technically from an earlier perspective, we can see that this looks as a clean textbook, all right, setup from Elliott. All right, so we are going to actually wait for some bit of reaction inside of this area, all right, for a push to the downside. All right, so if we look at what we can see using our bar candlesticks, we can see that this was not really a high close, because market did make a high close, all right. Inside of this zone is a very key area too, which actually lots of people, buyers, sellers, will be looking out for. All right. So this is a 5-wave move to downside. All right. This was a correction, the 5-wave move. All right. Price indeed made another 3-wave move to the downside, and this could be 3-wave move to the upside. All right. Before then, price will actually start making a push to the downside. All right. So we can understand that a zigzag is actually a 533-wave move. All right. 5-wave move down, 3-wave move up, 3-wave move down. All right. Then price will then make an X and then continue to downside. So if this area here could actually be an area which you want to be concerned with. So what can we see from this area alone from an Elliott perspective? All right, we can see that market did make this 5-wave move to downside from this high, 5-wave move down to the downside. All right, made a 3-wave move to the upside. All right, 3-wave move to the upside. So we can see this ABC to the upside. All right, so we can also see to the upside. Let's go down to the H4 to actually get the clearer picture of what we are speaking about. All right, we can have it that we have an ABC to the upside. All right, and if this is our overall A, all right, we can have our B inside of this zone, and we could expect our C inside of this zone before then price will make the pushing upside. So this looks typically like a complex correction. All right, an AB and a 5-wave move to the downside. All right, followed by a 3-wave move. All right, and our X. So we can say this as WXY. All right, you can use this as a WXY. All right, and we have a push to downside. So from this point, we'll look at volume and bit of reaction. If you start having some sort of bearishness in the market from this environment, we will look to sell with the right risk to reward. But overall, everything looks perfect. Everything looks clean. All right, for a trading decision. All right, even though price will indeed try to break up this zone, because these are 1618 Fibonacci level. All right, we will still look to find some bit of reaction inside of this area for a sell, because this typically could become a running flat. All right, this was the origin of B. All right, so if this is our A, all right, if this is our A and we have our B inside of this area, we could assume that this could also complete a running flat, and then we could make a push from this point to target the downside. So this alone will be about a 1:10 or 11 risks to reward trade. So it's a good position to be, and it's a good area to actually watch our price for. All right, so the next thing we're going to be looking at, we'll be looking at the gold. All right, last week we started selling gold last week. All right, inside of this area, which we spoke about, that we want to see gold actually start selling from this point, all right, to the downside. All right, that's what we spoke about. They want to be seeing gold actually start doing a correction after this triangle. All right, from this point, they want to see gold start selling. So if this could be the high, and this will be a A, B, C. All right, this could actually be a D, which we don't know at the moment. We want to actually be selling gold to actually hop up here first. All right, but that we do not know. All right, but technically speaking, we had a 5-wave move to the downside. All right, and this became our X point. All right, we could have our ABC, which we had, and we had a WXY. All right, what do you want to see? We want to be seeing a push it down downside. All right, so this is actually correcting. All right, this is a correction. All right, so I am having reasons to believe that the larger trend will actually be to downside, but that I do not know at the moment. So I will just hop up of gold inside of this area and look for some sort of reaction to then make another trading decision. All right, so let's go next to the USD Mexican peso. We spoke about this when this was inside of this area. First, we had a buy trade inside of this zone. All right, because this was a high, and we couldn't say for sure that this was our 5. All right, we started making trade decisions that this could be our A. All right, ABC. All right, ABC. All right, this could be a flat. All right, ABC. All right, which we do not know, but after an ABC, we want to see a push on upside, which actually hopped off. All right, and we started seeing this triangle forming from this point, and this now became clear to us that this area here, all right, was actually our high, and this was our A, all right, and this is our B. So we could expect our C to be either here, all right, because first thing you want to be doing, you want to identify a pattern, all right, and you also want to identify what that pattern is not, all right. You want to identify a pattern and what that pattern is not, all right. So if you have a pattern, you can start identifying what that pattern is and what it might not be. So that's what you want to be understanding. So what this doesn't look like, one, I've seen that this doesn't look like a zigzag, all right, because the high of the B is too high. If this was to be a zigzag, I would expect a shallow B inside of this area, all right. So for B to make this high, we could start expecting either a flat, all right, or a running flat, all right. We can start expecting a flat or a running flat. This B zone is just too high, because if you use our Fibonacci from the swing high here to the swing low, you can see that this actually tagged the 61.8. So this is not a zigzag. Not a zigzag. A zigzag, we should have expected something shallow. All right, that would be a zigzag. It's 8.2 Fibonacci level. So this is definitely not a zigzag. This looks like a flat. All right, the flat, and these are A. We have our ABC. So we could expect our C, because these are WXY. All right, forget the labeling. All you need to do is specify what you see in the market. So if we have that the market actually did indeed come bouncing off this point, we actually wait from the daily time frame to see what kind of price action we're having. But overall, we can see that this previous structure is being taken over because we had this high-low close. All right, we had this high-low close. So we'll not be taking any price action. If we start having reaction inside of this area, because one, we did see this alone, and then price started going down, all right, decreasing volume, all right. And if we have a reaction inside of this area, we could look to go up. At the moment, we don't have a reason to take an action. So an action at the moment, for now, for the USD Mexican peso. All right. So that's all the market we have to analyze today. And we look forward to seeing you on Monday on education. All right, at the academy. All right, we look forward to seeing you on Monday. But before we leave, let's just quickly speak about the USD Chinese yuan. All right, the USD Chinese yuan. We had it that we had this expanding diagonal, which actually played out perfectly to our trading plan. All right, we had this ABC, D, and E. All right, and we had from here, we had a buy, all right, to target the upside, and then price then indeed made this ABC to the upside, all right, which looks like some sort of zigzag, all right. So we could expect that the market will indeed do some bit of correction, maybe a three-wave move to downside, but that we do not know at the moment, all right. But there was some bit of consolidation inside of this area that we do not know, all right. We actually had some consolidation inside of this area. This was just to get off traders, all right. Some of the traders that are not very okay to make a trading action, all right. We had this price trading this structure here, and then market bounced off, all right. So what we could identify from an earlier perspective, we had strong wave to the upside. We have a three-wave move, and this was a five-wave move to downside, because this is a typical zigzag we spoke about. All right, this is a zigzag we spoke about earlier. All right, zigzag is more shallow. So this was a high, this was A, so this was B. All right, B inside of this area, and we had a C inside this area, and then price then started going up. Now, at the moment, throughout last week, we only had one sell inside of this area. to target this area, and we hopped off the trade. What do we want to see from this alone? All right, to give us confirmation that indeed price is ready to make another push to an upside. All right, but that we do not know at the moment. What can we identify? First, we could identify that if this is ABC, which is a zigzag, all right, we could expect the market to make a push from this point to the upside, but that we do not know. All right, now we are going to lower time frame. What also can we see? We could see that this is also a flat pattern. All right, it's also a flat pattern, and from this point, price then have started making this pushing upside. All right, so what do we want to see, and when do we start making trade decisions? We want to see the highs of A, all right, A being taken over, and once that happens, all right, we can then look for a trading action or reasons to be involved. But first, technically, we want to see the highs of A being taken over, because technically, I like to put it that the Elliott wave provides a context for trading action. All right, you want to see the lows of A being taken over, all right? Because if you could look at its individual candlestick, it took great power to break through here. So market then from this point have started making the push and upside, but that we cannot actually start taking trend decisions because we have it that market actually bounced off the 127. We still have the 161.8 inside of this area. All right, and we have come to the conclusion that this looks like a flat. All right, but that we do not know. All right, we could expect also that the market might actually do a WXY. That we will not know. But if you have it that the market actually breaks above here, on the retest of this zone, we will look to buy to target the upside, but that we do not know at the moment. So what we want to be seeing first is the highs of A's being taken over, all right, and then we can then hop on to the trade inside of this area to target the upside. All right, so that is the situation with the USD, Chinese yuan. Overall, everything still looks bearish. All right, we had the market did try to make a push on this point, but couldn't break. Market came back, also tried to do a push, but couldn't break the structure here, which you had in the market. All right, and market is still back into the zone. So we want to see the highs or of the lows of A being taken over. All right, then we can then start looking for reactions to the upside. All right, so thank you very much for your time, and see you on Monday during the Academy session. All right, it's the voice of Julian FX, and I look forward to seeing you in another webinar on Sunday, running pre-market reviews every Sunday. All right, run pre-market reviews every Sunday. So I look forward to seeing you again another Sunday. All right, let me know if there are any questions. We still have time for like 5 minutes. If there are any questions, or there's a currency pair you want us to analyze for you. Is there a currency pair you want us to analyze? All right, so we move to the next thing. Thank you very much and have a wonderful night rest.